You're listening to The White Rabbit, conversations on the art of presenting in a rather noisy world. Your hosts are Matt Krause and Alper Rosanes. Matt helps leaders of international companies speak, write, and present with confidence. Alper is a communications trainer and a startup investor with a diverse portfolio of companies in Barcelona. If you like this podcast, please share it with friends and colleagues. Now, on to Matt and Alper for today's conversation.
So today we have a guest on the podcast, a repeat guest, actually, Rick Pizzoli, who we'll bring on in just a second. But I wanted to mention that today I am flying solo. Alper is traveling today, so today it's just Rick and me. And Alper and I have been doing this podcast for well over 2 years. And this is my very first solo episode. And even though we've been doing this for over 110 episodes now, I am, believe it or not, a little bit nervous about flying solo today. So anyway, enough of that. Let's get to our guest, Rick. I wanted to say hello, Rick, and welcome back to the podcast.
Hello, Matt. Thanks for having me again. Hopefully, we can work well as a two-way team today, and the podcast will go smoothly.
Yeah. So I'm very happy, by the way, to have Rick on the podcast today because I may be flying solo with Alper not here, but with Rick here, at least I'm not talking to a microphone by myself. So anyway, let's do the quick version of the intro for the people who are new to the episode and were not here for the last one. So Rick is originally from my home state of California. He's been in the tech industry for many years, working at companies like, for example, Nortel. For the past 20 years or so, though, he has lived in Madrid and he runs a tech sales agency called Salesforce Europe. Rick also does a lot of mentoring of tech scale-ups across Europe, and that's why we sought him out again for today's recording. We didn't get to touch on that at all in the last recording, but so today's recording is all about that, Rick's mentoring of tech scale-ups across Europe. The big picture question that we want to dive into today is, what could these companies be doing better and how could their pitches be more effective? And Rick is often a mentor, but sometimes also an investor. So I'm kind of personally curious as to what is going to be causing him to cross that line from I'm an advisor to I've actually plunked down some money in this company. So that's one of the main questions that's going to be on my mind today is what are these investors looking for? So anyway, Rick, to start us off today, give our listeners some context. So when we talk about mentoring scale-ups, tell me a little bit about who are you mentoring and what are they trying to do?
Thank you, Matt. I'm happy to be on the show again. So just 1 minute background on us. So we have a sales agency helping technology companies either move to Europe or expand within Europe. And we're really that sales engine. So we help companies define their sales strategy and then actually deliver it with teams. So we provide managed teams from lead generation all the way through to sales. Mm-hmm. And so when we mentor companies, we really help them focus on how they move from a great product idea to kind of founder-led sales. So getting their first clients as a founder, and then looking at those early clients that they have, and then how they focus, define a ideal customer profile, and then scale that business.
Okay.
And so that's really a snapshot. So we have a lot of experience in doing it ourselves.
Sure.
So we work like London and Partners and VCs and PE companies and companies like UniCredit to really help mentor their startups. A lot of times there are just a few founders, maybe it's a university project, and getting from having their first clients to really scaling in Europe and then internationally.
Sure. And in the process of your work, you also do a lot of mentoring with startups and scale-ups. So tell me a little bit about that. Our readers or our listeners kind of know what that's going to mean, but set the context for them a little bit. So these people that you're mentoring, these scale-ups that you're mentoring, what are you mentoring them about and what are they trying to do?
So a typical startup that we're mentoring might have 10 people. So they have a technical team. They probably have the founding senior management team who's going to be CEO. Maybe they brought on a COO or an operations director, or maybe an early salesperson. They may have their first early clients or a mix of clients. And now they want to grow their business. And so we talked to them, and the first thing we asked is, tell us your story. Tell us about the technology you have, the problems that you solve, who you're selling to today, and how you're going to scale that business. And probably 9 times out of 10, they're still kind of in that discovery phase. They're still trying to find who wants to buy the product and talking
Okay.
to different kind of using friends and family in their own personal network. And then the hard part is to step from that discovery phase. Then to identify who are the best customers, where do I have the best product market fit, and then really build the business around that. And that transition of trying to sell to everybody to try to focus on a particular vertical and scale around that vertical, that's a difficult transition to make. And what the main kind of focus that we help people with.
And that's, correct me if I'm wrong here, but so it sounds like those are going to be pretty employee-wise, number of employee-wise. It sounds like those are going to be pretty small companies, like maybe 10 employees or 20 employees or something like that. Is
Yeah,
that correct?
10, 20 at that phase. Again, it's going to have the technical team, maybe some marketing people. Typically, it's still founder-led sales.
Okay.
And they're not professional salespeople, so they're trying to apply the solution to their ecosystem. It's probably, if they're a US startup or an Italian startup, it's going to be within their home country, typically within their own ecosystem, and it could be multiple different types of verticals.
Okay.
So it's then moving from that to focusing, and then moving from founder-led sales to building a professional sales team. So it's really hard to build a professional sales team if you don't know who you're going to sell to.
Yeah.
Because just hiring generalist salespeople who might not be experts in selling to retail or to banks or to telco or to higher volume inside sales SaaS, you really need to build those teams based on the types of clients you're selling to and the value of the product.
And one thing that I have seen personally over the years is that smaller companies where the sales are mainly still founder-led, the company tends to be kind of in love with the product, basically. Definitely not in love with the customer, or maybe not with the problem that is being solved, but in love with the product itself. And so there's this bridge between a mindset which is in love with the product and a mindset which is able to transfer out of the founder's head and think in terms of the problems that the client is trying to solve. Do you see that too?
Yes, definitely. It's quite often these people are technical people. They're trying to disrupt a particular industry or industries. Let's say it's AI today. So we talk to AI companies that are like, this is a great AI platform and it solves many problems in many different industries. We say, well, that's great. And I see that you've got 10 different clients, people that you know, but each of those verticals, you're going to have 10 competitors in the HR space or in the invoicing space or in the retail space. So if you don't focus on some of those and then A, focus on the vertical, and then B, answering your question, what value do you bring to that vertical? Exactly. What problems are you solving in that vertical? And then have an awareness of the competition and what problems are the competition solving? Because if you're AI for retail, then you're calling on these retail companies. They're also being called on by your competition. So you need to understand, how do you position yourself against competition? How do you beat them? And if you're a generalist, they're probably won't take the first call and probably not the second call if they don't see that you really built around solving their problems. So yes, moving from the technical solution to focusing on the value, to focusing on the vertical, and then what value do we provide to that vertical, and then even different job profiles within that vertical, because you're going to be selling to the financial people, the technical people, the sales people within that vertical. So the value message might vary depending on the job profile that you need approvals, sign off from within those verticals.
Okay.
So when we're doing, let's say, lead generation outreach, our messaging will change, whether it's targeting the salespeople in that vertical or the finance or the technical or operations. So that's really a granular level of localization and personalization and solving specific problems.
Okay. So talk me a little bit about the process that you use. Let's say that, for example, you're mentoring a startup founder, and the startup founder is working in his or her home country and is still thrashing around a little bit, just trying to nail down the sales process for the home country. Which vertical am I fit for? which vertical is my product fit for. I'm still looking for the product market fit. And then all of a sudden, here comes into the room Rick Pizzoli, who has this bigger picture of the world in mind. And Rick Pizzoli sees an entire continent that could be conquered, and somehow the founder needs to be walked through some sort of process in order to see this bigger world. So just talk me through that a little bit. What's that like?
Sure. We have day-long workshops that we try
Uh-huh.
to drill all this down. On these mentoring sessions, they're typically half an hour, and then sometimes we'll continue with them. So, but pretty quickly, typically within the first kind of 10 minutes of a client telling you the story, you can tell if they're well focused or not. And
Okay.
the question is, what do their sales look like today? Do
Uh-huh.
they have 10 clients? Do they have 100 clients? What is their average contract value? They should know those numbers really quickly.
Okay.
What is your ideal customer profile? So what different verticals are you selling into? And they might say, well, we're selling into 5 different verticals and the product fit is different in different ones. And so we'd go through exercise and say, okay, within those 5 different verticals, who are the happiest clients? Like,
Uh-huh.
which are the ones the sales process went faster, the implementation went easier. So you didn't
Yeah.
need to do a lot of customization,
Uh-huh.
the product fit was there. And they saw the value in your product faster. It was a faster time to value of closing the deal, implementing the deal, the client saying, wow, this is really great, and then being a happy client. So, so those 10 first clients, you might have only 1 or 2 verticals where that's really a good fit. So then we say, okay, so within those 1 or 2 verticals, how big is that space within your home market? And have you captured that space? Have you called on all of those companies within that vertical, within your home market? And do you have a sales team in your home market to really dominate that space? So if you haven't really identified what those verticals are and define what value you offer to those verticals and really reached out to build a sales team to address that in your home market, you're probably not ready for the European market, right? Because you really want to get that right first, get those case studies, get those reference clients.
Uh-huh.
Because if you think, well, telcos are sweet spot, but we haven't been able to sell telco yet in our home market, but we're going to try it in a new market. That's
Okay.
really an uphill battle
Uh-huh.
if you're calling on new telcos and you don't have that reference client at home. They
Okay.
say, well, yes, but my home market is difficult. They don't have the money, or it's not this. Maybe it's the wrong vertical, because if you go into a new market in a new country, a new language, and you don't have that reference, that cornerstone vertical, that cornerstone client, it's going to be difficult. But so typically they do, and that's what we build off of.
And some of the things that you mentioned here, they sound like pretty basic knowledge that pretty much every founder should have. You know, what is your average average contract value, the ACV? What is your average contract value? What verticals do you serve well? Which ones are working well for you? Is that your experience that these are things that people know well, or do you sometimes run into mentees who don't even know these things yet?
Well, most people know the terminology. They're in the
Uh-huh.
tech space. They've read about it. They're on SaaStr. But most people don't have those numbers at hand. So they
Okay.
don't. They say, "What is your average contract?" Well, it varies. We hear that all the time. Well, of course, you're going to have some bluebird big clients. You're going to have some smaller clients.
Sure.
It's called an average.
Sure.
Average contract value, right? So
True.
maybe you had $1 million deal, but most of them are 50,000 a year. Okay,
Yeah.
well, let's take the $1 million off because that was a bit of a bluebird.
Uh-huh.
And maybe you've done some, discounts to one's friends and family up in the early days to kind of get those deals in.
Uh-huh.
What is your average contract value? So if they say our average contract value is 1,000 a month,
Okay.
and we want to build a sales team to be able to sell this. I
Okay.
say 1,000 a month. That's too low of an ACV
Uh-huh.
to be sold, right? But so you need to do more of a digital marketing, because that has to be broadcasted very wide, and more of a product-led growth where you're getting the product name out there. People can click on it, they can play with it, they can self-serve, self-educate, put in a credit card and buy the product. And so there's that sweet spot on the pricing. So kind of 1,000, let's say a year, to 20,000 a year, it's hard to be sold. But kind of that 20,000 a year to 100,000 a year, if that's your average contract value, that can be sold maybe from an inside sales team.
Okay.
So you need to know those numbers for who you're selling to, and you need to know those numbers on how you're going to sell.
Okay.
So those are really important. And then what is your cost of client acquisition? What is your CAC? And
Okay.
and that's another really important number to know, which most people don't. So if your CAC is only 5,000, but your product average contract value is 50,000, you're spending too little to get new clients.
Okay.
You could be spending 50,000 to
Yeah.
get a 50,000 a year client, if they stay with you for 3 years, that's also how long do they stay with you? So what is a lifetime value of a client? So if the year value is 50,000, but they stay with you on average for 3 years,
Mhm.
that's 150,000 lifetime value. And so they typically say 3 to 1 of your CAC, customer acquisition cost to lifetime value is a good model to have.
Okay. And so before we get to the main question that's on my mind, which is what causes you personally to go from advisor to investor, before we get to that, I have some follow-up questions for you, which are basically, how do I, as a company founder, how do I know that it's time? Let's say that, okay, these basic questions that Rick is asking me, I know those pretty well. I know the answers to those pretty well. And I can point to a vertical that or even a couple verticals that I've been selling into very well in my home country. Uh, and I've got some staff. I've got some pretty steady revenue. I've got some financial results to show for the past, 4 or 5 years. So I'm an established company. I'm a going concern. But I'm wondering, is it time for me to sell abroad? So walk me through that a little bit. How do I know if that time has come for me?
Well, I guess there's two questions. One is on the investors, right? And then
Uh-huh.
the second is sell abroad. The selling abroad also partially depends on how big your home market is.
Okay.
And if you're selling to, let's say, retail, and you've got maybe 10 big retail providers either from your home country or active in your home country, and you're speaking to all of them and you're getting a decent amount of revenue. And the question is, do I now, I'm engaged with the Big 10. Do I either move to a new vertical and have to adapt my marketing and my technology to a new vertical? Or do I look to replicate the success in my main vertical in a new country?
Okay.
So our recommendation is stay focused as possible. It's much easier to go to a new market once you know your vertical and you're dominating one vertical with one real clear value statement, than waiting too long in your home market, going to a second, third, fifth vertical, and then going to a new country with a softer message. Like, we could do this in 5 verticals, but we need to build a sales team that are going to sell in 5 different verticals, because then it's a less specialized sales team. Our recommendation is stay in your home market as long as you need to really understand that those verticals, monetize them, because going into a new market, a new country, let's say, can be €250,000 in cost before you're receiving enough money to cover that. I mean, on the low end, 100,000, and that includes digital marketing, lead generation, and sales to open up a new market, and the support staff internally to be able to support that team, whether it's employees in your home office, employees in the remote market, or third party like us. There's still a cost and a time before you recoup that cost.
So if I, as a founder, I'm going to, I've got a nice stable CAC. What did CAC stand for? Customer acquisition cost, right? Okay, so I'm a founder and I've got a nice stable CAC in my home market. So the process in my home market is pretty predictable for me. But now I want to go into these other countries. I want to sell into Europe, and there might be 12 months before I have any revenue coming from these customers. So it sounds like my CAC, my customer acquisition cost, it sounds like my CAC is going to go way up for a short period of time in those other countries. Is that an accurate thing to be expecting?
There's a build period for sure.
Okay.
And people forget that there was a build period in their home market. And they think, there was a build period in our home market, but we're much better now, so it'll be much shorter in a new market. It will be better, but they don't know your brand. And you still need to position your brand as a reputable company versus other offers in the market. You need to find a project, you need to close the project, and you need to get paid for that project. So minimum that 6 months, typically it's closer to 9 or 12. So there's going to be an upfront cost to be able to enter a market.
Okay.
But we should quickly get to that CAC. So if that CAC is 20,000 in your home market, and you're delivering that by lead generation and inside sales, so you've got a real sales team established in a structure to deliver that, then we would say, great, what is your revenue targets for the new market? It's €1 million, and our customer value, our average contract value is 50,000. And our target's $1 million. That means 20 new clients. So how do we get 20 new clients? So we probably need to build a pipeline to have 80 proposals.
Okay.
So if you're closing 1 out of 4 proposals, you need 80 proposals to get 20 new clients. How do we
Sure.
get 80 proposals? Maybe it's 3-to-1 leads to proposal.
Uh-huh.
So if it's 80 proposals, I'm going to need 240 leads.
Yeah.
So how do I build a pipeline of 240 leads in that new market? So all that has cost.
Okay.
And once that pipeline takes 2 or 3 months to build, the sales cycle is 2 to 3 months. Those deals start coming in. Yeah,
Sure.
of course, those early deals, the CAC will be very high because they're your
Okay.
first deals in the market after you've invested.
Okay.
But hopefully by that 12-month period, you're starting to see that run rate of in your home market of the deals coming, the opportunities coming in the top of the funnel. They're moving from first contact, sales qualified lead, marketing qualified lead, marketing qualified lead, sales qualified lead to opportunity,
Uh-huh.
the deal. And if you track those numbers really in detail and make sure that, the numbers of what I'm experiencing in my home market,
Okay.
maybe they're a little bit better, maybe they're a little bit worse. And
Sure.
why is that?
Sure.
Maybe the pricing in the new market is more price sensitive. So I have to lower my pricing slightly. Or maybe it's actually, I can increase my pricing because the competition has a higher price and there's room for a higher price in that new market. So you need to be very aware of localizing the messaging, localizing the pricing and the approach for each new country you go into.
Okay. And let's switch gears here a little bit at this point and talk about you personally. So sometimes you're an advisor, but sometimes you also are investing in these companies. Is that correct?
Yeah, we do invest quite often. It's more of about a revenue share or a bit of sweat equity. So some
Okay.
companies may have not had the funds needed to move into a new market. Sometimes we've done structures where we
Sure.
provide part of our services in exchange for equity.
Okay.
And so that's typically how we've done it, but we've also put money into companies as well.
And
And when sorry.
Oh, I was just wondering, what causes you to cross this line between Rick as advisor, just giving out some advice to some guy that he met at an incubator, and now Rick is plunking down some services in exchange for equity or something else like that. So what causes you to cross that line?
Yeah, typically it's a client who we really like. We
Uh-huh.
like the management team. We like the technology. They have all these numbers we're talking about. So they have a really well-structured team.
Okay.
We believe we can make them really successful in a new market,
Uh-huh.
but they don't have the funds to pay our fees. And our fees are based on real people. So we
Sure.
typically provide half or full-time, fully dedicated people. There's other agencies that try to maximize, one person supporting 10 different clients and using AI and automation and spamming the market. So they can do that at really low cost. They don't,
Uh-huh.
they don't need high investment because their costs are virtually nothing. It's
Sure.
just automation, but we don't believe that really works. And so we don't want to offer that low quality service. We only want to offer our high quality service that we think produces results. And if some clients, maybe there's a 3, 6, 12-month window before they're going to get their investment or before enough revenue comes from their home market, we would say, okay, let's do a bit of a revenue share, or let's do some sweat equity for our services in exchange for equity.
And you mentioned at one point, you mentioned that you do this. One of the factors in you deciding to do this is, do I like the team or not? When you're making this decision about, do I like the team or not, are we talking about like a slide on the pitch deck that includes, some headshots of the 3 founders, or is Rick going out for a beer with these guys afterwards? Or where on the spectrum are you making this decision about, we like these people enough to exchange services for equity or something else?
You need to meet the team,
Uh-huh.
and there needs to be, they can't. We're not an investor.
Okay.
We're a sales agency, right?
Sure.
And so investors are professionals. They look at hundreds of companies and they make the decisions and they have the whole structure behind it. So we're not a replacement for that. And we
Okay.
make a lot of intros to investors. We help people structure their sales and marketing strategy and getting these numbers right. So when they do go to investors,
Mm.
they're ready. And once we do, we make intros and we help facilitate that process.
Okay.
But if they're not quite there and they need just a little bit of a bridge between where they are today, maybe it's even in their home market. Maybe in their home market, they're moving from the founder selling to a professional sales team, and we have the right people on the team that can make those connections. We'll say, okay, let's go ahead and take some equity. Let's make those connections. Let's make a bit of a bet on these guys because we still need to pay our bills. We have a
Sure.
running business. People pay us retainers and commissions, and we build their business. And we
Sure.
can have existing clients subsidizing other clients, certain
Sure.
clients that are paying for the service, subsidizing other clients. And so
Sure.
we never do that. Anybody on the team that is going to be doing that, they're personally invested in this process. And so
Okay.
there might be, let's say, half time retained by one client, but they have half time available or quarter time available to say, listen, I'm going to invest, with Rick and Salesforce, share some of my own time to be able to bridge the gap between investment and getting some new clients
Okay.
for this.
And I have one more question for you before we wrap up for the day. We discussed this a little bit last time, but tell us more today. So you mentioned just a couple moments ago that when a company is talking to its investors and explaining to them what it wants to do, that it wants to, to sell into Europe, it wants to sell into other countries, that you're advising these companies on what kinds of figures, what kinds of evidence, what kinds of research are the investors probably going to want to see. So tell us a little bit more about that. What kind of data or research or whatever are the investors going to want to see?
Sure. So you need to have these numbers in your home market, like I talked about. Which verticals are you selling into today? How well you're doing within those verticals? What your CAC is? What your sales team looks like? And what that operation costs you?
Okay.
And how now if the investment is for growth, and some investment is clearly for growth, they might say, okay, we're going to put $5 million in, $2 million is for product development and building the core team, and $3 million is for market expansion. Okay, how am I going to spend that $3 million? I'm going to go from the US to Europe, and I'm going to open 5 European countries. They're going to cost me $500,000 each.
Okay.
And this is the team I'm building. This is how that money is being spent. So I'm spending $50,000 on digital marketing. I'm spending $100,000 on lead generation. I'm spending $200,000 on the sales. And this is what the people are going to do. This is how big the market is. This is maybe the competition that's in the market today. This is how we're going to beat the competition. And these are realistic metrics on when we're going to achieve these revenue targets. And investors, and we can see through quite quickly if those revenue objectives are realistic or not, and how they're going to deliver them. Some people say, oh, we're going to do $1 million in Germany from the UK, and we're going to do it from our home team, and it's going to be achieved in a year.
Sure.
And we look at it like, that's never going to happen, right? It's never going to happen. The Germans just take too long to make decisions. They want to kick the tires. They're not looking at flashy technology. They want to know, what's the core value you're going to bring us before we spend any money? So all those numbers need to be realistic and backed up by data.
Okay, excellent. Well, we need to wrap things up for today. So thank you very much for joining us today, Rick.
Thank you, Matt.
And also thank you for being present on my first solo flight for this podcast. It was good to have you with me.
Absolutely. We didn't crash. So,
we didn't crash.
Do it again in the future.
We did. That's true. We didn't crash. That's like, I'll remember that was my victory for today. So thank you very much, Rick. And Alper and I will come back to you next time. And so thank you for joining us today. Talk to you later. Bye-bye.
Thank you for listening to The White Rabbit with Matt Krause and Alper Rosales. You can subscribe to the podcast on Spotify, iTunes, or through your favorite feed.